Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, we're going to go over the Forex market wrap. We're going to highlight what's happened this week and what we could potentially see going into next week. So just to cover the news for this week, there has actually been quite a lot of news and quite a lot of data that we've seen this week. And one of those things was Kiwi employment. We had Kiwi employment data which showed that there had been a positive boost to the New Zealand dollar. This was something that we outlined, and we had a little look at Euro Kiwi this week and had a little look at what could potentially be happening there and whether the downtrend could continue. And we can see here on Euro Kiwi at the moment we're getting a really nice bearish weekly close after a consolidation, and what we're hoping for is that we get a bit of a pullback here into this zone so we can look for further shorting opportunities, because we obviously believe that the Kiwi economy is going to start picking up a lot quicker than others, so that could really benefit the Kiwi economy in the short term. So we could see some buying of Kiwi continue, and obviously the Eurozone is way behind, coronavirus cases going up there as well, and the fact that they are one of the lowest to start vaccinating could be a problem for the Eurozone in the short term. So Kiwi was something that was quite big on this week's agenda. One thing as well was the pound. So we had the Bank of England interest rate decision. They kept rates at 0.10%. We actually saw a little bit of a boost from the Bank of England initially, just because they basically stated that they're not seeing anything that would suggest that they'll go into negative rates. They're going to leave rates pretty much as they are, but they also kind of hinted towards the fact that the UK economy is not doing as bad as they thought, and that there could be some hikes in the future. The fact that the UK as well are rolling out vaccinations quite quickly could suggest that the UK could get back to business as well quite soon. So very interesting, the difference between the Eurozone and the UK's approach to the coronavirus vaccinations. Obviously huge difference in those, and it could pay off for the UK in the short term. Looking at the other data we had this week, so obviously we had non-farm payroll, so that's the US employment, basically what we saw here was the average hourly earnings were dropped quite substantially. Now the average hourly earnings, basically if the average hourly earnings comes in lower, it's basically suggesting that the amount of jobs that have been created are low income jobs. Okay, so they usually then would say, or what we'd usually analyze from that is the fact that not necessarily there'll be more money floating into the economy. It's just basically that there are lower income jobs, which could suggest that the economy isn't doing too great. Okay, again, we obviously know the coronavirus having a big impact there, although the previous jobs number was minus 227,000. It came in at plus 49,000. So more jobs are being created in the US, however they are lower income jobs. That's why we're seeing a huge spike in prices at the moment on the US dollar. So if we look at euro dollar, for instance, we had the news come out here, and the market is continuing to push to the upside. The market is selling the dollar on the back of this data. Now in the long term, or in the medium term, we are definitely want to be buyers of the US dollar. So this little move here could just be a pullback in the grand scheme of things, but we pointed out 1.2 as a key level to watch this week for some potential buying opportunities. Price came down into this zone. We're starting to see those buyers step in, so I think we could see a little bit of dollar weakness going into next week, potentially coming back into some key levels. We have a really nice level up at 121.65 on euro US dollar, where we can see that price found some resistance, support, resistance. Could this be an area where price wants to head towards for a rejection? We'll have to wait and see. Obviously there will be some couple of levels of resistance within this area as well, which will give us a little sign if price is going to continue and break this 1.2 level, which we are anticipating, with price coming down into around about the 118 level, which is just sort of through here. Moving on then, so pound, obviously we were talking about the pound and the fact that the UK economy could have a little bit of a boost in the short term. Pound is obviously loving that. We're getting a lot of chop on the pound, and the strength and weakness table at the start of the week was suggesting that we could see a reversal. Now, price is hovering around about this 137.50, really struggling to break above it at the moment. So we're just sitting on our hands really with pound. If pound can start to show us signs of a reversal, like a weekly bearish candlestick, then that'll be something that we'd be interested in. But until then, price could still surge and head towards this sort of key area through here around about 139, because we do have a large volume area within this these candlesticks just through here. So if the UK is going to benefit and from the recent data, and investors are going to look to buy pound off that recent Bank of England statement, then we could see price rally into 139s. But that's all going to be dependent on what happens with the US dollar. At the moment, price is capped at these highs. Let's see if we can break above it. If we break above it, we've got some long opportunities to potentially take a look at. Finally, we had a little look at gold. So gold was on the list for some potential opportunities. We're basically looking for some more downside on gold. Obviously, price is going to spike a little bit on the fact that the data out of the US wasn't so great. So you know, we could see a little bit of boost there. But in the sort of midterm, I still feel like price should come and test around about this 1700 or 1690 area, just as we expect the US dollar strength to continue heading towards March and April. So we'll have a little look in the market outlook at the strength and weakness changes. Those were the key charts to have a little look at, and the key news this week. Hope you enjoyed this video update. If you did, give it a thumbs up. Comment down below, how did you get on this week, and I'll speak to you soon.